interest rates continue to take a toll on mortgage applications, and now perhaps an even bigger threat may be looming over the housing recovery. Diana Olick has details for us. Diana.
Well, that's right, Bill. Rising rates continue to turn more borrowers away from the mortgage market. Mortgage applications fell 4% last week from the previous week as the rate on the 30-year fixed rose yet again. Take a look. Applications to refinance down 4.4% to a 2-year low. That continues to take away from consumer spending power. And purchase applications were down 3.1% last week, down 28% in just the past month. This as the average rate on the 30-year fixed jumped to 4.68%, the highest since July of 2011. This is taking away from the purchasing power just as home prices are really taking off. Prices are up over 12% from a year ago. Now, we've talked a lot about rates and about home prices, but one thing that's kind of been flying somewhat below the radar is the possibility of changes to the mortgage interest deduction. House Ways and Means Committee Chairman Dave Kemp, a Michigan Republican, tells CNBC.com he is carefully looking into revising the deduction as part of the total tax reform package expected later this year. Obviously, those in the real estate business are lobbying heavily against any changes. They don't like that, especially now in a rising rate environment. Maria?
All right, Diana, thanks so much. So is the mortgage interest deduction really that important to the housing market?
Let's talk about it with Mark Goldman, a loan officer for C2 Financial. He's also a lecturer on real estate at San Diego State University. He doesn't think this is a problem. He says most people don't even factor it in when they buy a home. But then there's Fred Glick, real estate broker, agent, who's a principal at U.S. Loans Mortgage. He says getting rid of the deduction would kill the market. Gentlemen, welcome to both of you. Mark, explain why eliminating the mortgage interest deduction wouldn't hurt the real estate market. How could it not?
Well, the market prices have gone up quite quickly. We've seen just in the last month how an increase in interest rates is causing kind of a softening effect on pricing. But people, in my experience, who are purchasing homes rarely even look at the mortgage interest tax deduction as part of their analysis. Further, the analysis that underwriting uses to determine somebody's ability to borrow does not include the after-tax cost of the mortgage. So don't get me wrong, I don't want it to go away, but I don't think it'll be the end of the housing market. People will still be able to buy homes and afford them with the same approach and analysis that they use currently.
Fred, you see a dampering of the market.
Oh, absolutely. There's no doubt about it. First thing is, what we're not taking into consideration is the deficit has been down, and if we keep the economy going, the deficit will keep going down because we'll be getting more tax revenue. I mean, 36 million people have that deduction right now. Two-thirds of them make under $100,000, and a few dollars here and there a month means a lot to them. And also, rents would increase. And the worst part of this is state and local taxes will actually have to go up because what you're doing, if you're taking away these deductions, they get less income. So all around, it's a nightmare.
What do you think of Mark's contention? I mean, you're a broker. You work with people when they're taking out a mortgage. He says they don't even really take that into consideration when they're buying a home.
Well, here's what will happen. Say they're looking at a $200,000 house right now, and we go and do their numbers based on their ratios, and they qualify. Well, if you take away the deduction and then you say to them after tax, this is all you're going to have left to pay, they're only going to be looking at the 150 or, less house. You're going to see a 17% price decline in all of the houses because of that going away, and a $32 trillion hit to the economy. So this is insanity by taking this away.
Well, Mark, let me ask you what the alternative is. I mean, if the question is that this deduction may very well go away, is there something else that is as equally impactful?
Yes. In fact, one of the options that's under consideration right now is a tax credit that would reduce a tax obligation that would help people to afford a home. And that would actually help the people in lower income brackets. In fact, the $150,000 price point would probably be occupied by a family maybe in the $50,000, $75,000 income range. Right now, that income range does not receive very much benefit from the tax credit or from the tax deduction.
How would the credit work?
Well, what's been recommended is a credit of 15% of the interest that would actually be a reduction in the cost of ownership. And that would have a greater benefit for somebody with a lower income. In other words, let's say somebody has a mortgage payment with $1,000 of interest, they would get to a tax credit of $150. And that could help them to qualify for an even larger home. Plus, it would help people who are making less than, say, $100,000, $125,000 to afford even more home.
What about
right now,
What do you think, Fred?
Credits don't work because, especially people in the $150,000 range, it's that monthly payment that they have to make. They can't wait till next April when they get the credit on their tax return. So you're just trying to change an entire system that's been around for years. Just because it's been around doesn't say that it's good, but it works, and it works really well now, and it'd just be crazy. It would put the whole real estate market just completely upside down.
One thing I would ask Fred to consider is that the timing of the tax benefit from the tax savings now still occurs at the time the tax is paid. Some wage earners do increase their exemptions to improve their monthly cash flow,
Right.
and they could do the same thing. So, and don't get me wrong, Fred, I love the tax deduction. I'm in the range where I get the most benefit. And I don't want it to go away, and tax expenditures in general are about 20% of our national budget, and there's a lot of place to look to eliminate tax expenditures. But on the mortgage market, I hope that you're not right in that. I hope it does not devastate the housing market. We need the recovery.
Well, I mean, is the market that vulnerable? I mean, you know, for the last several months, what we've been talking about is how strong the recovery has been, probably the best part of the economic recovery overall. Is it that fragile that taking away this deduction is going to make that big of an impact?
Do you think it is, Fred?
Yeah, oh, absolutely. Psychologically, in addition to the realities of it, you're trying to tell every real estate agent and every buyer, okay, this is the new mathematics that you have to do. Why would you do that? Just keep it as it is. It's fine the way it's working. Let's keep building new houses. Let's keep selling houses. We'll get more income. The deficit will go down. And basically go get it from somewhere else in the savings. There's plenty of fat in that national budget. And we all can agree on that.
All right. Gentlemen, thank you both for your thoughts today. Appreciate it very much.
Thanks so much. We've got 35 minutes before the closing bell sound to the day. We've got a market that is off of the low, certainly down about 8.